What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 29. It's November the 20th, 2023. We made some trades today, so let's get into it. So first and foremost, let's talk about the important levels that we have on the chart today. So we have yesterday's closing price represented by this purple line right here at 35,017. So let's go ahead and get into it and talk about the trades that we made today. So trade number one right here. So right here, I shorted here after prices were rejected from the top of the trading range, and then they formed two lower highs at B and then at C. Now, this trade works well in downtrends, but the uptrend was just too strong right here. The first pullback in a strong trend is very risky if I'm trying to fade it and go against it. Now, that's very important because I want to talk about what exactly I was looking for at this junction. So take a mental snapshot of what this whole entire scenario looks like from A, B, and C. Notice how it comes at the top of an uptrend, and then we have a lower high that gets formed, followed by a second lower high that proceeds to break the first higher low that got established at point A. So let's go back and look at some notes of uptrend reversals from the past so I can show you exactly what my mindset was right here. So this was a day from October 31st this year. Notice how we did have an uptrend, and then we came back and established a lower high right here at A, followed by a second lower high right here. Now notice how we continue to make lower lows and lower highs, and then eventually the move broke to the downside. So in this scenario, we see that the uptrend reversal was successful. Now this is what I was kind of looking for today, and let's look through a couple of more examples to just get a good picture of what exactly I was trying to do. This is another example from November the 5th, 2021. We had an uptrend right here, then we made a lower high right here at the blue circle, followed by the second lower high. Now this lower high pretty much acted as a resistance level throughout the next maybe hour and a half, and prices were never able to really break above it in a serious manner. And then the downtrend continued all the way back down to a major level of support. Here's another example from May 25th, 2021. Same scenario. We had a strong uptrend followed by a lower high. Prices were never able to come back and break past that level. They sold off, created another lower high, and then eventually the move broke to the downside. Same thing right here on May 27th from 2021. Strong uptrend. The uptrend tops out. We see a lower high followed by a second lower high. Prices were never able to break past that lower high again, and then the downtrend ensued. Now, pretty much that's what I was looking for today when it came to the chart that I was trading. But the only thing is the uptrend was way too strong. And that's the one thing about looking for that uptrend reversal. Sometimes it might look good from a price action perspective. The candle patterns might look good. Your setup might look perfect, but you still got to consider the overall market context, because now that I'm looking at it, I'm seeing a lot of things that kind of gave me the signals that maybe this reversal wouldn't be as legit as I thought. So let's go through those signs and talk about those, because those are very important. So the first sign that we need to talk about is the fact that prices were trading in a range for a good amount of time. So let's pull out to the 5-minute chart. And let's just box up what I'm talking about right now. Okay, so we were trading in a range between, let's box it up. We can call the lows down here at 950, somewhere around there, all the way back up to this level right here at 35,050. So that's the top of the zone, 35,050, and the bottom is around 34,950. Now we've been trading in this zone for a good amount of time, really going all the way back to November 17th. So that was on Friday. So this has been a zone that's been pretty prevalent over the past couple of trading sessions. So I expected for us to come back up to the top of the zone at 34,050. And that's exactly what happened. And that's what this blue line at the top of the chart represents. That's what this line is right here, the top of the range. So I see we did have a strong move, right? Now the bottom of the range is right here at 34,975. Now notice how we came all the way down to the bottom of the range, right? We had a strong move to the upside once the market opened, made a higher low right on yesterday's closing price. So that's very important. That's significant. That's telling us that the trend is very strong. When you add in the fact that we had a super high volume candle followed by a very large candle to the upside with a very large body, even though it did have a wick, for the most part, it was more body than wick. So we still count it as a strong momentum candle. And then you had another huge momentum candle that followed that, followed by a third one after that lower high got formed. So we're just seeing a big surge of buying coming into the market. And I expected it to come all the way back up to test the top of the range. And that's what it did. Now, when it hit the top of the range, it started wicking out. We had 1, 2, 3, 4 long tail candle wicks up here. So right then and there, I was thinking, okay, the buying is kind of fizzling out right here. So let me see if the trading range gets respected and prices break back into it. Because whenever I'm trading the trading range, one of the strategies that I look to use is if prices come back up to the top of the trading range and they kind of have a false breakout like they did right here, if they ever break back down into that trading range, I want to short the first lower high that I see and then look to take prices all the way back down to the bottom of the range. So that's pretty much the idea I had right here. But I was like, you know what? Let me just wait for more confirmation because I saw the wicks. So I'm seeing that the buying is fizzling out. So after we see the wicks, then we see this lower high get formed at B. So I said, okay, we have a lower high. Now all I'm waiting for is prices to get broken at this prior higher low from A. And once they do that, I want to look to short as prices come back and retest that level. So we see our second lower high get formed at C. And I'm like, oh, okay. We didn't have not only one lower high, but we had two. Now I like what I'm seeing. So once we broke past that level, I waited for them to come back, retest the break of this prior higher low support level, and then I shorted right here. Now, here's the reason why this wasn't the best short per se. For one, like we just talked about, we had a strong move to the upside. So even though we were in a range, don't let that get you kind of locked into one way of thinking that the range has to be respected. Sometimes the range is going to break out. Sometimes it's going to be respected, but you got to really just watch the market and observe, see what the signs are, and then play it for how it goes. Don't play what you want it to be, play what it actually is. And that's the most important lesson I learned here. So I expected prices to come back up to the top of the range, and they did that. But then I kind of got married to the idea of the uptrend reversal being established, because if you look at what happened, we did break past that level. That's true. But let's take a look at what happened before all of that. Look at this wick right here. Now, after we made this high, this was the high for the entire day up until that point so far. We pulled all the way back, right? But look at where we pulled back to. Let's follow this over to the left. This is where we pulled back to. All we did was come back to retest a prior swing high. So anytime you have a very strong uptrend, that's usually how price action is going to work. It's going to come back, retest a level that used to be a prior high. And then if you see demand down there, that pretty much tells you that the uptrend is still going and the buyers are still strong. So that was signal number one. Well, actually, that was signal number two. We saw the strength that the move had coming back up into the top of the range. So the fact that we bounced off the bottom of this wick right here and respected this level was signal number two. Now we come back, we respect that level again right here. So that's test number two. Test number two was successful. But then we pulled up and we made that higher low at C. So I was like, oh, okay, B and C, two lower highs. I was completely ignoring all of this over here. So then we come back a third time and we test this level. So we had three touches, three tests of this prior swing high, and we were never able to close below it or break below it. And then on the third and final touch, notice how this candle had a very large body to the upside, which indicates that momentum is coming into the market. So one of my biggest rules is to not go against momentum. You know, if you see a large momentum candle like this, you do not want to short against that. If anything, you want to short as prices are on the way back down. So I was kind of conflicted right here because I'm seeing the uptrend reversal that I'm looking for, as well as prices breaking back down into the trading range and making that first lower high. So one part of me is telling me to go short, but then it's another part of me saying don't get into the short because you're shorting against momentum. So in situations like that, when I'm conflicted, I have two choices. I can either stay on the sidelines, or I can get into the trade but be very, very, very aggressive with my stop, meaning that if the trade goes against me very quickly or just very slowly, it kind of depends. You know, it's hard to really say what it means when a trade goes against you, but I kind of have a feel for how the trade should work if it's going in my favor. And if it starts to move against me too much, I just cut it quickly and I get out and I just take a very small loss. So that's what I did right here on trade number one. Just took a 5-point loss, and that's okay with me because I felt like in this scenario, I just didn't know what to do. But looking back on it, whenever you have conflicting signals, it would make more sense to kind of sit on the sidelines, because this was 9:50 in the morning, 20 minutes after the market opened. So that means that it was still another 6 hours and 10 minutes before the market was going to close. So it was plenty of opportunity that would come behind this trade. So if you skip it, it's no big deal because it's going to be plenty of trades for you to take down the line in the future. It's just about being patient. So that's one of the biggest lessons I learned right here throughout this whole section at trade number one. Just whenever you have conflicting signals, don't get in. Wait for a more clear signal, something that's better and something that makes more sense, and then you can participate into the market. So after we saw all of these bullish signs, if we weren't convinced that the market was on the way to the upside before, we got confirmation once we had this higher low get formed right here. So it's like, okay, we retested the level of support from the prior high 3 times. All of them were successful. And then we came back, made a higher low, which was also another test. So this could be test number 4. And then we continued up. So once we continued up after that higher low and we broke out of the range, I was like, okay, I understand what I'm looking at now because the range is no longer in play. We've broken out of it after having very solid price action principles. So that tells me that the uptrend is pretty strong. So then we pushed all the way up, created a new swing high at 35,080, pulled back, created a higher low right here. So once the higher low was created, I circled it up, drew my level of support across it, and then I just looked to go long right here at trade number 2 as prices came back to retest the support level of the higher low. And then I just took it back up to my scalp target and I called it a day after that. So that's all I really wanted to do today. Just come in and make a few good trades and just do the right thing. So I think on trade 1, I took a loss, but that was a loss I'm willing to accept because I understood in the moment that I was breaking one of my rules when I got into the entry. So I was very aggressive with my stop and I stopped myself out at the right time because this trade would have never worked. And eventually I would have ended up getting stopped out as prices came back to break the top level of this wick right here. So I think on trade 1, I wouldn't say it was a perfect trade. Well, a perfect loss, but I would say it was an okay loss. You know, I'm making progress because before in the past, I would have just held a trade like this and said, look, if I got into the market right here, I'm getting into it. I'm either going to have a win or I'm going to have a loss, either going to hit my target or hit my loss or hit my stop loss. But if you see conflicting signals that tell you that the market could move against you, you don't have to wait for your full stop loss to get hit. So I think right here, I showed progress because I decided to get out before the market stopped me out. But I think the next level of progression that I want to reach is just not even taking that trade at all. You know, just looking at it and saying, nah, I'm good. I'll wait for a better opportunity. So I think on trade 1, that was a good loss. And then on trade 2, that was a good gain. I followed my strategy perfectly. When I'm looking for the higher low to work, this is exactly what I want to look for. I want to look for prices to come back, retest the level of higher low support during an uptrend as prices show you that they are strong. And we had all of the indications to show us that the market was strong. So I feel like I did a good job right there on trade 2. So overall, today was a decent day. Ended the day in profit. Only traded 1 contract today. Just still taking it easy, trying to work my way back into just a higher level of confidence. You know, the drawdown period that I was in for the 2 weeks before this one is still kind of lingering in my mind a little bit, but I've been feeling really good just trading 1 contract, and I feel like I'm gonna just keep trading ones until I feel it's gonna be one day where I wake up and I just feel like it's time to go back to trading 2 or maybe even 3. But until that day, I'm just gonna keep trading ones because I kind of like this. I'm not gonna lie, it feels good to trade ones because I know that my risk is not that high. And when I know that my risk is not that high, that means that I have a bigger cushion, which means that it's less stress, which means that pretty much I have to really do something terrible in order to hit my daily loss limit. And I trust and believe in myself to follow my strategy enough to the point where I won't go all the way down that path. So just not having that stress on my back really helps me perform better. So those are the biggest lessons I learned today. I hope you guys learned a lot about trading that uptrend reversal and making sure that you don't ignore the bullish signs that might go against that uptrend reversal that you're looking for. And also, I hope you learned about paying attention to the overall movement, because it's not just about taking the setup because the setup looks perfect. It's about taking the setup because the setup looks perfect and it aligns with the context of the market and it fits into the overall bigger picture. And I hope you guys learned a little bit more about using that higher low strategy. So that's all I got for you guys today. I'll be back tomorrow on November 21st, ready to run it back again. But until then, you guys have a good one, study hard, and take it easy.